What's next? What's the next big focus, the next big part of your strategy that you're going to look to execute?
So there's a couple of pieces, but the first thing I'd say is we are a long way off from being done with what we have. These redevelopments take a year of planning. Mm-hmm. They take another 6 months to execute, and then it's 3 to 4 years to ramp up to these new stabilized levels of performance. So that's a big focus right now.
Absolutely.
The second area is that one of the things we've realized, as I think we believe, for what it's worth, we're the largest lifestyle-oriented hotel owner in the United States today. And what we found is that there are some benefits of scale, even though we don't operate any of our hotels. Mm-hmm. But by being able to combine our buying power and the business that we offer, there's some economies of scale. And so what we found because this pursuit was so public, obviously, we got a lot of inbound calls. And whether it was people wanted to buy assets, people wanted to operate or brand any of the hotels, and vendor partners who said, we do some business with you or we do some business with LaSalle. We want to do more. And our response was, that's great. Come on in. Tell us how it's going to benefit us, and hopefully it'll benefit you as well at the end of the day. So we think there's at least $10 million of annual operating savings out of the operating, not the corporate level, but at the property level, through these efforts. And we have a team of people who are working just on that, trying to understand how everybody purchases and what we purchase in all our hotels and where the opportunities are, and then having these conversations with our vendor partners about, okay, if you want to do more volume, tell me what it's going to cost me, and is that better than what somebody else is offering me at the end of the day? And so we think by the end of next year, we should be annualizing that full $10 million of savings, and at our multiple, that's about $150 million of value.
So as you think about all these various aspects with your existing portfolio, which now includes much bigger now, of course, because of the integration of LaSalle, does that mean you're going to hit the pause button for a little while on further transactions activity, or do you, if somebody came to you with a great deal, I'm sure you'd consider it, but are you actively pursuing anything?
We're an active looker, but we're probably not an active pursuer at this point. We're mostly still on the sell side, and given the discount between the public market value of the company today versus the private market value, there's a potential arbitrage opportunity there. We're trading at a 30+% discount to the value of assets, which we're proving out through the sale of $1.2 billion in hotels already. And so to the extent that continues to exist, there may be additional assets we identify for sale that we then go ahead and sell those assets, use those proceeds to buy our stock back and arbitrage that difference in value. So that's purely opportunistic, something we did back in early 2016, which eliminated and narrowed that gap of the value differential. And if we need to do that again, we can do that. And being a bigger company, we have more flexibility now in terms of how much of that we could do and how quickly we could do it.
Okay. Stepping outside of your sphere for just a little bit and taking a bit of a broader view, not from your strategic standpoint, but just overall, the transaction landscape, the transaction market right now, particularly in the REIT space. What do you see there? Is it encouraging? Is it discouraging? Is it a little both?
So are we talking about individual property transactions or corporate level transactions?
I guess a little of both.
Okay. So let's start with property, being that we've spent a day meeting with brokers and operators and owners who are looking to do transactions. I think what I would say is that it's a bit of a bifurcated market.
Yeah.
If you have good quality assets in major markets or resort locations, it's a very robust buyer pool. If you have suburban assets, less attractive secondary market, tertiary market, I would say those are trading on much higher yields, and your buyer pool is not as deep. The debt market is allowing both markets to be attractive, however, because interest costs are very low, and financing levels can be fairly high, and so you can engineer a fairly positive cash-on-cash return opportunity. But I would say it's still going to be a modest transaction market this year compared to last year on the individual property side. On the corporate side, well, we've already seen one potential deal between Park and Chesapeake. It'll be interesting to see whether anybody comes out of the woodwork to make an offer on that, given the decline in the assets since the deal was in the stock prices since the deal was offered. So that I have no idea whether that'll happen or not. That would be a private equity buyer,
right?
And maybe the kind of buyer who's looking at a strategic, but maybe at a slightly lower quality level of asset base. So I do think over time, there's no doubt there's consolidation in all aspects of the space, and whether it's the operating company side, the brand side, whether it's the REIT side, the institutional ownership side, or even the brokerage side, right, with JLL buying HFF. So I think you'll continue to see consolidation. The cost of operations, technology, all of those things continues to rise, and if you can share that over a bigger base, as a REIT, the best way to get a competitive advantage is have the lowest cost of capital. And so one way you can do that is spread your overhead, i.e. our team, effectively over a larger base, and not offset that by paying ourselves a lot more money, which is not something we're about to do.